spending more than they tax, and creating some form of inflation. It's not always, CPI inflation. It's asset price inflation, right? The price of a house in America has doubled in 12 years. That's crazy. You're a young kid coming out of college, you want to buy a house. It's double what it was in 2012. And you're like, my salary's not double. And so pricing power gets eradicated, eviscerated in time with printing too much money. And I think that story worked. And that Bitcoin rally gives air and oxygen to the rest of the crypto revolution, which is still in its infancy, right? The Ethereum, platform, all Solana, all the other platforms who are really building block space to then build on top of. We haven't made that transition as a world yet, right? Like, so Bitcoin as a macro asset, we get, it's a finished product. You don't need to do anything. But the second part of crypto, the fun part, the real revolutionary part, right? Decentralized stuff is just in its infancy. That platform is still used mostly for a stable coin or a tokenized fund that pays interest in lots of ways could replace cash. Now, are the authorities going to let that happen? All of a sudden, you'd have a run on all your commercial banks. Your regional banks, and lots of banks, right? We leave our money in bank deposits at zero half the time, and so there's lots of things to figure out in this process. But it's great that the biggest player in the world is in the middle of it.
And I find it so interesting that yield became the four-letter word of the last cycle and was arguably behind the collapse of CeFi and a number of other platforms. And now the yield conversation is coming back with a vengeance, but with the adults in the room, as you mentioned, right? You talked about this fund that BlackRock has launched on Ethereum. They seeded it with $100 million. I love that it's called Build, but BUIDL. They went ahead and took a crypto meme, from HODL. But that is going to be, as you said, an interest-bearing, effectively stable coin. And this is stable yield coming from BlackRock, right?
Yeah.
This isn't the Ponzi of Celsius going out there and, pumping their own token to find fake yield for you. This is real players doing it in a real manner and left of center to identify with what's happening way further left of center within the Democratic Party.
Yeah, no doubt. And I get all that plays into Bitcoin. And so, listen, can we have corrections? Of course we can. We went from 35,000 to 73,000, but it does feel like there is a bid somewhere below 55, 62, where I even saw the Japanese, I think it was Yucho, the Japanese post office said they're going to start looking into buying Bitcoin. I mean, that's the biggest pool of savings
pension fund in the world. Yeah.
And so I think that the the Kraken has been unleashed, and we just need to sit patiently.
So you guys obviously are, I'm assuming, out on a bit of a roadshow, trying to convince people to buy the Galaxy ETF. You're constantly raising money. You're now, I believe, over 10 billion AUM. That's up 5 times from just over a year ago, right? You're having these conversations every single day. Are you convincing people that they need why it's important? Or is it sort of the lighter lift of saying, listen, even if you hate this thing, look what it does for your Sharpe ratio. Like, look what happens if you put 1% in your portfolio. The math is indisputable.
I think it's a little of both, but I think that this populism story and Bitcoin being one hard asset, and a hard asset that young people like, right? Baby boomers in America have $80 trillion of American wealth, right? It's over half of wealth is owned by baby boomers. They're going to die. Maybe some will eat healthy and die older than normal, but they're all going to die. There's one certainty in life: you die. And that money is going to get transferred to a younger generation who is just much more comfortable with digital assets. And so we're even going to have this secular shift. And so there's so many reasons you should have something in your portfolio, right? And it's, again, a lot
Get
of
it in there. Yeah.
Buy Solana.
$8 Solana. Yeah, exactly.
Yeah. But $180 Solana, it's a different bet. It just is a different bet. Could Solana go to 300, 400? Of course it could. A lot has to go right for that to happen, but it certainly could. But that's from 180 to 540 is 3x. From 8 to 180 is 24x, right? And so entry point's really important. Being sober about what volatility is very important, right? These are 100 vol assets often. Like, that does not warrant any leverage. It warrants negative leverage.
Yes, exactly.
And so many people play in these markets and they just want more and more leverage. And I'm like, it's literally like telling a crackhead, hey, along with that crack, why don't you take a little fentanyl?
And now double that fentanyl each time.
You're gonna die. You're gonna die at one point, in standard deviation terms, that it ever has. And so, if you end up getting a real correction in NVIDIA, I'm looking at the chart now, right? It's broken a little bit in the last 2 days. It would not surprise there to be a correlation in the rest of the momentum stuff. And so you never know what creates what I call correlated risk unwinds. When every position in your portfolio goes to hell in a handbasket, right? That's usually an exogenous shock. It's usually something you don't see coming.
COVID.
But sometimes it's just the positions get too heavy. Right now in the S&P, we are the lowest daily range we've had in the last 6 years, and the second lowest since 1990.
I didn't realize that.
Right? So everyone's being lulled to sleep. Stocks go up every day, risk assets go up every day, fixed income's not doing a whole lot. And so it feels really safe. You can buy puts on the S&P really, really cheap, or the concentration of wealth in AI. And I was talking to my friend, he's like, I should look at buying this AI company. And it's the fastest growing, private company I've ever seen. They have 3 employees and they're already valued at multi-billions. The amount of work you're going to be able to do with less people is changing rapidly. And that to me is just going to be a bigger concentration of wealth. Societies don't do well when wealth changes hands that fast, right? We're used to an equilibrium. What worries me, quite frankly, is if we do get into the runaway trade in crypto, right? There is a scenario where you can see crypto become a runaway trade. It's just self-fulfilling. It eats itself. And, you're not at 100,000, but you're 300 or 400,000. It's not my base case, but I can make that scenario up. That's not good for society, right? Society doesn't like all these new people are all, how did that guy get so rich and I'm not, right? It's what creates revolutions. It creates wars. It creates breakdown in civil society.